Good morning. It's Thursday, September 11th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So gold ETFs, they see their fourth consecutive day of growth. Remember, we have contracts as small as the 1 ounce contract and the 10-ounce contract. So if you never traded futures before, that's a simple starting point for entering the futures markets. Now looking at silver ETFs, that selling has come to a halt here as traders added about 645,000 ounces of their holdings in the previous trading session. Perhaps they were looking at buying some of that dip here as we came down to some critical levels of support as outlined in the chart pack. Now, if you look at silver has rallied about 15% this quarter while gold has risen about 10%. A breakout over that $42 level and $44 level could really drive that momentum higher here as we've seen the gold-silver ratio drop from about 104 back in April down to about 88 as of this recording. Now, looking at some of the data here yesterday, wholesale inflation, it unexpectedly slowed in August with the producer price index edging down about 0.1% in August. That brings the annual rate down to 2.6%. This follows July's inflationary surge of 0.7% month over month, which lifts the annual growth to 3.1%. So those numbers, they really helped the stocks, but so did Oracle's big surprise. The software and cloud company said that its backlog of work had grown to $455 billion in the last quarter, up from $138 billion in the previous 3 months. Now, the data point here was the latest sign that the AI demand continues to grow. Oracle shares finished up about 36%, and Oracle is currently just outside one of our top 10 holdings here at Blue Line Capital. So we do focus on active wealth management, and if you're interested in learning more about some of our portfolio solutions on the wealth management side, I could connect you with our VP of Client Strategy, Jacob, and then also please reach out via email at info@bluelinefutures.com. So let's check in on your setup on precious metals here in the U.S. equity markets this morning. We've got some red on the screen in the metals markets, and we've got some green on the screen with the U.S. equities. The dollar index is firmly higher, and you do have foreign currencies just a bit lower. So stock futures are edging just slightly higher ahead of this much anticipated U.S. inflation data. So the S&P 500 up about 0.2%, sitting at 65.51. Yesterday's big breakout to the upside takes us out of this range that we're in, which was 63.50 on up to about 6,500. This was the first breakout after a period of consolidation has taken place. You have the NASDAQ futures here up about 1/4 basis point, sitting just below that 24,000 mark. Now, taking a look at the Mag 7, the global markets, well, the Mag 7, those are slightly higher on pre-market trading. And then you go to European trading, well, those stocks, they were muted here. And then Asian trading, well, those stocks also struggled a bit for direction after a 5-day rally. One thing you want to watch here is if you are bearish on the market, you always want to get the scores on the board because the reality is that the data, it doesn't lie. So if you look at the previous day's sector scores, 7 out of 11 were in the green. You go to the previous day, it was 10 out of 11. What you want to see is the opposite of that. If you're a bear, you want to see 10 out of 11 of those sectors were in the red, where everything is getting sold off. So you really want to focus on some kind of signal here if you're seriously bearish on the market. You want to look at critical levels of support being broken. You want to see an uptick in the volatility index and really breaking out over that 1920 level here. And then again, those sectors all coming into a meltdown. Now, we do have some key events here later which could cause some volatility in the markets. I looked at a report from JP Morgan, and they're saying that if this number comes in extremely hot, it could dash away some of those prospects here of the 50 basis point interest rate cut, and we could see some wild moves in the U.S. equity markets as much as 2%, which would really trigger some of the traders out there in those markets. Now, you also look at the ECB. They're expected to leave interest rates unchanged. So that's where your euro currency is going to be impacted. It's selling off a bit here ahead of that data. You've got expectations for a hotter CPI, also boosting the dollar index here coming into this. And what does that do? That puts a little bit of pressure on the gold market, and it lifts 10-year treasury yields just a bit. So if you look at the CME's Fed Watch tool, you look at that, you'll see it has about a 92% chance of a 25 basis point interest rate cut and only an 8% chance of a 50 basis point interest rate cut. So yesterday we saw that inflate, and then what happens is we come into the hot this next inflation data point, and you start to see that 50 basis point kind of float away here. And that's something we talked about over the last several videos here coming in. Something else that I check here is on the poly market, you got an 80% chance of a 25 basis point interest rate cut and an 15% chance of a 50 basis point cut. Which one of these has more validity? Neither do. They're just different tools in the toolbox. Like you got a Phillips screwdriver, you got a big one, you got a small one. These are different things. You got one for repairing sunglasses, and you got another one that's doing some plumbing stuff. Big difference here. So, but it's the same type of tool here. So the poly market is something that I bookmark along with the CME's Fed Watch tool, and you should pair those next to each other on your little tabs function on your internet browser. Now looking at central banks here, of course, we're in the Fed blackout period. And then overnight, you look at the price action in the metals here and some developments in the chart pack, some key developments here in the markets. And a few that I always check off the boxes here are gold, silver, crude oil, and the crypto markets. Gold holding some minor support, coming down near that 36.50. 51.80 was the low of the session. That was our critical level of support here yesterday. So that's holding on the session. And then you look at below that level, it's really 36.19 and 35.92 are your levels there. Remember, these markets, they tend to take the the escalator up, and they take the elevator down. So we're going to want to really kind of hone in, and that's why a lot of trimming has been doing and taking place here, and with a lot of client accounts coming into some of these event types of risk, getting just slightly more defensive, taking things down to your position size. A lot of times these positions, you slowly take them off, and then other times you put quite a few of them on all at once. You look at the silver market, well, that first level of support, and you'll outline that in the chart pack, is going to be 41.15. Now, I would anticipate that if we did get below this level here, because it has held several times, that we should see some stop losses getting hit below that level. A break below the $41 mark, if it is not met with new capital inflows, may result in a capitulation where we've seen 4 straight days of outflows, traders trimming positions closer to that 42, anywhere at 41.85 on up to about 42.25, taking some of those things off, looking at entering that dip there. However, I believe that they will have those stop losses below there where we could see some capitulation, and that could result in a move back down and a test near that $40 range. Now you look at the crude oil prices, well, those are currently declining, and we've been in the $60 to $65 range here. We saw some increased geopolitical events that helped drive that price action higher. However, if you look at the larger picture out there, we've seen some of that supply-demand structure shift more to the bearish side. As you see, the International Energy Agency, well, they report that a record surplus is projected for next year, and even larger as OPEC Plus continues to increase its production alongside its competitors. So you look at the crypto market here, we have had a nice surge off of those lows that were outlined in the chart pack, pushing back on up here, getting close to our pivot point on Bitcoin, which is about 116,000. The overnight session just below that 115 mark. And you look at Ether, well, 42.65 remains that key support. So again, on the ETF flows, we saw some buying in gold, silver, palladium, and some sells on platinum here. You look at palladium, palladium has had 7 straight days of growth here on the upside. It was an incredible move here yesterday in that market. A lot of you had some call spreads on. We trimmed some of that action off in the December contract here. So if you guys got any questions, you want to check out some of our research, a lot of people signed up yesterday. I believe that we put out a lot of good content. And just beyond these macro markets here, we've got a wealth management side of things where my partner Bill Baruch, frequent guest on CNBC, outlines some of our key portfolio plays on the halftime show. We've also have Oliver Slope. He puts out a report on the livestock market, which has seen a significant correction here recently, and also the agricultural markets, which have a WASDE report coming out here. So a lot of action in these commodity markets, and commodities make up a important part for portfolio diversification. So again, you guys got any questions, reach out. Remember that futures and option trading, well, it does involve risk of loss, and it may not be suitable to all investors. Good luck, go get them, stay prepared, because of the fact we've got this CPI report coming out. Take care.